So let's talk about whether or not your Social Security benefits are going to be tax-free. After all, on the 90th anniversary of the Social Security Administration, President Trump held a press conference, and he did say that Social Security is going to become income tax-free for most seniors. Now, I'm going to link a video that I did about this at the end of this video, and the title of it was, "How do you know when a politician is lying? His lips are moving." Now, I'm not accusing President Trump of lying. If there is an accusation to be made, it's deception. So if you are planning to take early Social Security, know that the definition of a senior under the One Big Beautiful Bill Act is anybody 65 and over. I'm not there yet. So when I heard the first inklings that Social Security is going to become income tax-free, I got very excited. I thought that that was something that would be awesome. But the more critical thinking I used and the more time I gave to researching, and it became really clear that that cannot be practical. And it turns out that it's not. So as I said, if you're 65 and over, yeah, up to 88% of seniors are projected to have a reduced income tax liability because of what's called a bonus. Okay, it's a super bonus, and I'll talk about that in just a moment. But the real question is, if you're planning on taking early Social Security and you're before your normal retirement age, your FRA, full retirement age, people in my age group, that's 67, and you're not yet 65, then you don't qualify for this super deduction because you've got to be over the age of 65. So again, if you're planning on taking early Social Security, make sure you're at least age 65 so that you can take advantage of this super bonus to the standard deduction. And what that is basically is that from now until the end of 2028, that's when this bill will sunset unless it's resurrected and made permanent. Until the end of 2028, any senior, as defined by President Trump as people over the age of 65, will receive an additional standard deduction. For married filing jointly couples, the deduction is $12,000 additional. And for single filers, it's $6,000. Now that's better than a sharp stick in the eye, but that doesn't make your Social Security benefits income tax free. I want you to understand that, because a lot of people who aren't savvy with finance, that are receiving Social Security, who are over the age of 65, heard in the headlines, maybe watched a little bit of that press conference back in, I think it was July or August, July. The president said that it's going to be income tax free. And maybe they turned off the TV or decided that's all I needed to hear and then went off to do whatever it is they do. That's not necessarily true, especially, here's the part that I think worries me the most. There's some people will hear that headline and they'll change their deductions because maybe they're having federal income tax taken out of their Social Security check because they don't want to be in a position where they're going to owe income tax. Now they hear this and they decide to call the Social Security Administration or go online and change their withholdings from whatever it was to zero, and then bang, in April, they get surprised with a tax bill. I don't want that happen to you. So I want you to be very clear on two things. One is, if you're already receiving Social Security and you're over the age of 65, you will receive, and depending on your filing status, an additional standard deduction. It doesn't necessarily mean it goes right to Social Security income. It goes to all of your income. So technically, you could say that your IRA distribution won't be taxed, or whatever other sources of income that you're receiving won't be taxed because there's a higher standard deduction. So there's the part that makes me a little bit nervous, is that deception in the titling makes it seem as though your Social Security benefits will not be taxable. It is not true. Consult with a tax professional is my advice, to make sure in your specific situation you won't be surprised in April with a higher tax bill because you made changes without telling your tax professional because you read the headline. So make sure you're okay with that. Tell people that you know who aren't as savvy maybe as you about what's happening in this OBBB, the One Big Beautiful Bill. It does not make Social Security benefits tax-free. End of story. So let's talk about whether or not you should receive Social Security before your full retirement age. And my answer to that, if you asked me back in the day when I was a certified financial professional and held my own licenses, and people would say, so what do you think I should do? Do you think I should take early Social Security? And I would ask them straight out, look them right in the eye and say, you only have to answer me one question and I can tell you what to do. And they would lean in and say, what's the question? And I would say, tell me when you're going to die. Right? Because that's really the situation that you find yourself in. And I'm not giving you personal advice, because taking Social Security, whether it's early Social Security at your full retirement age or waiting till age 70 to maximize your benefits, is a completely personal decision. You can sit with the financial professionals. They can go through all the software, put all the inputs on expected rate of return on your investable assets, expected rate of inflation over the time period between now and the day that you're going to die. What is your current need for income? All of those things are thrown into this pot. They're stirred up, and out comes an answer. The answer is, I don't know. I really don't know. For me personally, I did take early Social Security, and I don't regret it, and I'll tell you why. I know that I'm going to get that money until the day I die, and I'm not worried about the Social Security Trust Fund being diminished. I think that that will not happen, and I've also said that given the current political climate, this administration certainly won't let it happen. Other administrations, whether they're Republican or Democrat, they risk such turmoil, even more turmoil that's happening than what's happening in this country right now, if they decide they're going to turn around and take away or reduce dramatically people's Social Security benefit. I think that is what I call political suicide. So I'm getting the money while the getting's good. And I know that money's coming in. We're blessed enough that we've structured our finances that we are debt free, but both my wife and I still work part-time. And that's a completely different set of rules on whether or not that income will be taxable. I've covered that in another video, and I'll be happy to do it again. So basically, to sum up this video, I want you to know, if you are receiving Social Security and you are a senior citizen, which is now defined as 65 and over, even though I could go to the McDonald's drive-through and ask for a senior coffee, and I'm only 63. How does that work? But you've got to be over the age 65 or over to qualify for the super deduction. Number one, the deduction is limited based on your filing status. Married filing jointly, it's $12,000. Filing single, it's $6,000. And it goes away at the end of 2028, which means that, let's see, I'm 63 and 2 is 65. It won't be there by the time I get there. So another loss for me, but I wouldn't count on it either way. And as far as taking Social Security early, I will do another more detailed video on that, but it comes down to a personal decision. Yes, I recommend, if you're using a certified financial planner, to run all the simulations using realistic inputs on the rate of return on your current investments. Do not use 10 or 12%. It doesn't matter to me that you're earning 10 or 12% in your portfolio right now. That is not sustainable. It will turn. It's going to turn. I don't know when, but it's going to turn, and it's going to turn hard. So prepare yourself for that. And then use reasonable inflation expectations. Right now, the Fed's mandate is to have a 2%, which I think is ridiculous, CPI or inflation number that they're trying to get to. When I was running simulations for my clients, 3 was the minimum. Most of it was 3.5 to 4, and sometimes we edged up depending on what our collective reasoning was. But we overshot on the inflation, undershot on the investment return projections, took a look at all other income sources, all debt obligations, and decided, okay, this additional money from Social Security will come in handy, while knowing that it may bump us into a 50 or an 85% tax bracket, I shouldn't say tax bracket, but that Social Security money that you're earning, up to 50 or 85% of that will be added back into your taxable income. So sitting with a certified financial planner, sitting with somebody who's not trying to sell you an annuity is my number one goal. Get objective advice, pay for the advice. Do not let them say to you, we're going to give you this for free, because there's no such thing as free. At the end of the day, if somebody says to you, we'll do this financial planning projection for you for free, means that at the end of the presentation, they're going to sell you an annuity. Mark my words. Don't let it happen to you. Okay, well, this is Popsie Guy signing off. If you like this content, please hit the like button. If you think I'm full of cookies, as I like to say, please leave me a comment. Let me know where you think I'm way off. But I'm trying to get the message out there that the Social Security benefits that people over the age of 65 are getting are not tax-free. All right, we'll see you soon. Thanks for watching. Bye-bye.